we'll look at three things. One, we'll do reflection on assessment number 4, and 2, we'll talk a bit for half an hour to 45 minutes about the accounting exam technique, and 3, we'll talk about assessment number 5, which is coming on Monday, and we'll also touch a bit on the upcoming exams. And starting with reflection on assessment number 4, and so I want us to all of us one by one to look at number 1. When we were writing the assessment, what were the difficult areas in the assessment? And number 2, what errors did we make during writing, if you have made any error or you felt that you could have done something differently? Number 3, and what errors did you make during preparation? And lastly, what do you intend to change and or rectify or do differently when writing assessment number 5 on Monday? Who wants to go first?
Yes, I think the challenge that I faced was the closing transfer part, closing transfers. I even wrote it down, the closing balance of the trade receivables. And we had like this, I think we had to do 4 exercises, I think, on the closing transfer. So I think that one was challenging because I kind of skimmed through it when I was studying. I didn't think it was important. I thought the depreciation part was the one that was gonna hit and knock me, but the closing transfers, yeah, that was the problem.
Before you continue, what do you mean by closing transfers?
You see, when we have to calculate the balance, the nominal accounts, and what is it, financial?
And the balance sheet accounts or the financial positions accounts.
Yeah, the ones that we close off at the end of the year.
Yes.
Yes, those ones.
Oh, so when you're closing off the T accounts, the general ledger accounts.
Yes.
Oh, okay. I noted that. And what else? That's the only thing.
Yeah, I think that was the only thing because I think I was supposed to do some method of calculation. But depreciation was fine. There was closing balance of trade receivables as well. That one was okay. Yeah, I don't have any other problem.
Okay. And do you think you could have done something differently during preparation for this closing transfers?
Yes, I feel like
Closing of accounts?
I feel like if I didn't skim through that PDF when I was studying, because I thought it was less important. I wanted to rush over to study the depreciation and know the formula for calculating the different formulas for calculating depreciation. Had I not skimmed through, I was gonna be okay. So yeah, I think
Okay.
yeah.
Yeah, but we have done these transfers 1,000 times, in the class because they're very, very, very,
Remember,
very.
Satalamina, I missed 2 classes before prior.
Oh, sorry.
Yeah.
You didn't come in the right class.
Yes.
But we have done them several times because I knew or know that those are very important stuff. Remember, even the slide which I said you must screenshot it and make it the screensaver of your phone. That is the main purpose because that's very, very important. But worry not, we'll quickly run through them again now so that we can all be on the same page. So that should we have similar things come Monday, you can cruise. And did you make any errors when you were writing, Tele? Any mistakes that you have made?
Maybe with the calculations.
The calculations mistakes.
Yeah, the calculations, because Konala, we had to calculate something and then I had to write down opening balance plus purchases minus cost of goods sold. Yeah, I think I made a mistake there. Somewhere.
Oh, I hear you. And I don't know if it's good or bad with technology. You know, in the olden days, you used to have almost like a blank sheet to write on. where the advantage of that was that even your calculations, whether
Uh-huh.
right or wrong, the marker will be able to see them. Unfortunately, with these new systems, we just want an answer and in a
Yeah, like
specific
multiple
field.
choice, you just select the answer and move on with your life.
Yeah, and
Mm.
yeah, that maybe that's something, an area of development on our side we may have to reconsider and see if
You
someone
should, because I
somehow
feel like
can
also that
give.
makes us lazy. Because then if you think you don't know the answer, you're gonna like, let me just suggest it's B. And then you move on. Can't you still have to calculate when you get there? I think we should do something.
No, I hear you. I hear
Yeah.
you, Tel. And in terms of assessment number 5, have you thought of anything that you will do differently when you're going to write?
I haven't, but I think I should carry and use a different calculator because this one that I was using, the sharp, it's not doing the things for me. I think I should carry that other one. Konale, the case, I don't know what's the difference, but that one works better than this one because this one gives you answers in like a decimal form. That one gives you answers. Yeah, you get it.
Yo, I'm not sure about changing calculator this late, Tel. And really, ideally, you should use the calculator that you have used while practicing. So now,
Okay.
when you're left with 2 days, I don't think you should change the calculator this late. Just try to deal with what you have because now
Okay.
you don't want to find yourself having pressed the wrong button in the exam and you don't know where to press again and you
I
might
hear you.
get
Thank you,
stuck.
sir.
Yeah, yeah.
All right.
Okay. Thank you for that, Kele. Who is next? Who wants to talk next? We had Kele. She spoke about the closing of T accounts or the general ledger accounts and the issues with calculations and challenges with the calculator. Who wants to share? How did you find assessment number 4? What were the difficult areas? What errors did you make during preparation and during the assessment? And what do you intend to do differently on assessment number 5?
Uh, it was okay, so, but like the difficult parts I found was I don't remember the whole question paper per se, but there was this question about calculating the last something, and I was confused on how to do that. So I feel like yeah, that one was kind of difficult for me. I did answer it, but I wasn't confident within my answer.
Calculating the last what?
I don't remember per se, so, but like it was the last something.
Does anyone in the class remember what were you calculating last? The last something something?
Or maybe
Uh,
I'm phrasing it differently or something. I don't know.
but
But it was based on calculation.
what was contained there? What other figures did you see? Oh, or maybe Tele want to assist us. Tele, what were you calculating?
If I remember correctly, I think we had like a statement of profit or loss. What is that? What was it that? What's
I think it was that one.
where you
And
had
then
to
you had
calculate the, I think, but we had to find the answer for profit, something like that. Or was it the where you have to find the income in the year? They gave us like a income statement, say, and then you had to calculate. So Shuti, you had to add your purchases, you had to add your purchases in cash during the year, something over there, if I
So you were
remember. Oops, I didn't
recalculating
write it down.
your
I'm just
your
reciting.
you were recalculating the profit or the revenue.
Yes, for the year.
Okay, we'll look at something like that and see if we'll all be on the same page. But that becomes almost mathematics, not really, not really accounting. Okay, so that was the
yeah,
only one which kind of tricked you, Mulem.
I think so. Say, and like with the other ones, it's just a matter of like I was rethinking my answers as I went through the question again. So that confused me also because mostly when I write exams or tests and stuff, I just write and then submit. But this time I had time to go back and recheck my answers, and then I just started rethinking my answers and the answers that I put there. So yeah, maybe that's like maybe something I won't do in assessment 5 to recheck.
Yo, okay.
Yeah.
But if you have time to rethink, were you able to finish?
Yeah,
Or are
I
you that
did. I
fast
was
in
able to finish.
writing?
I was able to finish the whole question paper, but I had 10 minutes left before I submitted.
Oh, and you were rethinking during that 10 minutes.
Yeah, during that like rechecking of the assessment, I was just rethinking my answers. But yeah, maybe that's something I won't do in assessment 5.
Yeah, but what I will advise you is that as you are doing rethinking, in fact, I would discourage you from doing rethinking unless if you are remembering something, because the rethinking, it usually happens on areas where you're not quite 100% certain of how you have answered some of the things. And
Yes.
now, when you are rethinking, you might have answered it 90% accurate. Now, when you are rethinking, you might be confusing yourself and go and mess up 90% to be 20%.
Yes.
So what I will advise you is that try to avoid changing anything unless if you just remembered something. I'll give an example. You calculated the cost of sales wrong, but you're not spending time trying to rethink the formula. Somehow when you're writing other things, busy with other things, it just popped up in your mind that no man, the formula for cost of sales, it's actually opening inventory plus purchases minus closing inventory, and I didn't do it that way. Let me quickly recalculate and go and paste it. Unless if you have just remembered something. If you are trying to reason with yourself to say, how about this, how about that angle, now don't change.
Yes, sir.
Okay. And do you think, so I guess rethinking was your main error which you have made during the assessment. Do you think you have made any errors during preparations or anything that you will improve during preparation? Or maybe before you respond to that, Tele want to say something, Tele?
I opened up the assessment 4 as review. I'm checking for that last question.
Mm-hmm.
Yes. We had two. So there was the one Leben Kulmangai before, prior to what Butsepo was saying just now. We were given a adjustment trial balance. And
Mm-hmm.
there we had two current assets on the statement of financial position of Kiani traders as at 28 will amount to. So we were given that we had to calculate the current assets on the statement of financial position. Hey!
Or current assets.
Yes.
Oh. So you were already given statement of financial position with other figures, or there was nothing at all. You just needed to use the trans balance to calculate the current assets.
Yes, we needed to do that. Yes.
Ah, that's an easy one. I was worried. I thought maybe we've asked mathematics this time around. Okay, that's fine. I think that's accounting. That's fine. We'll touch on it not so long.
Okay.
Yeah.
Let me try to find that last question and then I'll get back to the one
Okay.
Butsepo was asking about. Yeah.
Okay. No, that's fine. With Sepo, you were talking about the errors during preparations. You may continue.
During preparations, I don't think I've made any errors so far. I'm just focusing on like the calculations and like the closing balances. There was a question where we had to they gave us like information and then we had just to fill in the table of like where does this account close on which account, and then with like yeah with that table only, and then I'm just focusing on like where do like the closing transfers close, like where, because the cost of sales closes on the trading account, sales returns closes on the sales account, those type of things.
Mm.
Yeah.
Okay. No, I hear you. I think we will also touch on the T accounts and see if we cannot get everyone to to the point in that regard. And is there anything that you you have planned to do differently when you're going to do assessment number 5 on Monday?
Yeah, it's just the rethinking things. I'm not gonna focus. Like I'm just gonna trust in the answers I've given and not unless like I think of some, unless I remember something like you said.
Okay, no, that's fine. Thank you so much for that. Madzinge, I do see your response that unfortunately you saw a ghost. You were practicing using the quizzes and the questions came differently. Unfortunately, you will never find the same question unless if it's just similar. Whatever that you've already seen, it will never come again. However, if you understand the principles, whatever you get given, you will be able to move with it. But Madzinga, what I want you to do for us, of course, I see one of the errors that you are highlighting, that you have used quizzes to practice. Of course, you need to go through the entire learning material. Quizzes is to test your knowledge if indeed you understand what you have learned, and there are additional questions as well, more especially on unit number 10 and 11. You need to look at those as well and see if you are fine, you understand the content, and on specific topics you can even go out on and Google other topics and or other questions relating to a specific topic. Let's say, for example, you are having a problem with the bank reconciliation statement. You can go and Google the bank reconciliation questions and you practice with those so that you can be sure that you really understand whatever that you do. But what I want you to do for us, Madzinge, is that on the chat, indicate any specific question which was which thrown you off completely. I do understand when you say you saw a ghost, it means almost everything was blank. But if there is any specific question which you felt that you were almost 000, you didn't even know where to start, or you could start but you didn't really know where to proceed from there, just write which question was that there on the chat box. We'll come back to you after Ms. Laho. Ms. Lahomo.
Hey, good morning, everyone.
Yes, good morning. What were the difficult areas of the assessment? Did you make any errors
I think
during?
the one that they mentioned whereby the current on the segment of financial person of Guyana, that's where I didn't calculate. I got that one wrong. That means my calculations were wrong. And also I struggled with the closing of credit receivable. That one also I did got wrong. And I think I was also didn't finish do the right calculations on accumulate depreciation. So I think I need to focus more on what I didn't get right this time around and prepare myself, give myself more time to be prepared.
Okay, and do you think there is any error that you have made during preparation other than limited time?
I'm not sure but then for me not getting the right answers, it means I did something wrong when I was preparing for this assignment. Because if when I was practicing, I was getting everything right, I was supposed to get the correct answer. So for the fact that there are certain parts that I didn't get right, it means I must just go back and then be prepared to check the areas where I miscalculated and then be more prepared this time around.
Okay, and on the calculations, I didn't hear properly. You said which areas of calculations did you
The
struggle with?
trade receivable one.
Oh,
I think I'm still struggling with the T account as well. I must also focus on that one when I be preparing for the one that is coming on Monday.
okay, okay. I'm glad you know the areas which you struggle with, Ms. Lahom.
I think
Mainly
the T
because,
account also need. Sorry, sir.
yes, mainly because Monday is just around the corner. There is only one full day left of tomorrow, of
Yes.
which you just need to jump in, hone in, and harness the areas that you're not quite comfortable with. Go and do 2 or 3 practice questions on those areas, and once you grab them, you move to the next, and you repeat the same. Now, thank you for that, Ms. Lahom. Daphne, did you speak?
Yes, I spoke.
Oh, you were the first to speak, right?
No, I think second, third or something, fourth, somewhere there.
Okay. I think we have all spoken except for Madzinge, who is still typing, but we'll give a time to type. So let's quickly run through the 2 areas that we have highlighted as most problematic, which is the closing of accounts. I think we have done them last week as well. I'll just quickly check what we've done last week, if not a week before last. This is the T accounts. Remember, T accounts is a street name, eh? It's a slang. This is a general ledger accounts. General ledger accounts. T accounts is a street name, so it's an informal name, but almost acceptable informal name. So this general ledger accounts, and remember, I think I've mentioned sometimes last week that in practice the T accounts or the general ledger accounts are barely structured this way. Most of the time they look more or less like a general journal. Where is the general journal? They look more or less like a general journal, something like this, where you will find a debit side and a credit side, and there are some descriptions here where they will just write the name of the account. In practice, almost like a TB, they look more or less like a TB. And sometimes you'll find that it's only one line with the balances being negative or positive. Positive meaning debit and negative meaning credit. And sometimes you'll find that is the general ledger. It will be an account called interest or whatever, and all the transactions that happened on the interest will be listed there. Then another account, all the accounts under that, all the transactions under the account listed there, and that. So that's how it looks more or less in practice. But for academic purposes, we show it as a T account so that we can all understand. And on the T account, the first thing first that we'll need to understand is that there are basically 4 groups of these accounts, of which the first ones are assets and the second one are liabilities. The third one are equity. And remember, the fourth one is the income and expenses. Remember, income and expenses are equity accounts. They are called equity accounts mainly because they close off to the equity account. They don't really have a closing balance and opening balance. That's for income and expenses, and everything else do have opening balance and closing balances. So what is important to also remember is that assets increase on the debit side and they decrease on the credit side. Liabilities increase on the credit side and they decrease on the debit side. equity increase on the credit side and the decrease on the debit side, and income increase on the credit side and the decrease on the debit side, and expenses increase on the debit side and decrease on the debit. So you can almost see the pattern that only assets and expenses, things that we usually buy and or pay for, that the ones that increase on the debit side, and everything else, liability, equity, and income, they all increase on the credit side. You can easily memorize it that way. I don't think you can forget if you memorize it that way, because this is very, very, very important, because it forms the basis of everything. Then let's move to the accounts themselves, the closing of accounts. Here, first thing first, when we are closing the account, remember what we said is that the main thing is to calculate the totals, the debit side and the credit side, and see which side is bigger than the other. The bigger for all the accounts. That's what you ask yourself. Which side is the bigger side? And that side becomes your totals at the bottom. And I believe we all know basic mathematics. You don't really need a calculator to see that the debit side is bigger than the credit side. You can, by just looking, you can see that 43,000 and 2,000, that's like 45,000. 112 and 3,000, that's like 115,750. You can almost see, before even using the calculator, that the debit side is bigger than the credit side. So you use the bigger side and as the total. Total for both sides, the debit and the credit side. When you are done, remember, we are balancing the account here. Or before I move on, let's see here, Kele.
Yes,
Kele,
sorry
I'm pronouncing your name right?
Yes, you are, sir.
Okay.
I just wanted to say, I don't even think it's the problem with knowing how to close off the account. Because with accounting, the problem starts when you see there by general journal, that 3,000. You find that when you're doing your calculations, that 3,000, let's say, for example, it was not even supposed to be there. You probably made a mistake and you took that 3,000 to your credit side and you took that 2,000 and you put it on your debit side. Now, when you have to calculate and close off the account, automatically everything is wrong. I think that's the problem that as I see when you're explaining, I think that might have been my issue.
Okay, so meaning let me walk one step backwards. I thought maybe it's in front. So on the transactions, these transactions, remember, they're coming from somewhere else, of which I think the foundation lies here, as to assets increase on the debit side, the decrease on the credit side, etc., as we have mentioned. So now, when you are having the transactions, let's use the general. Where is it? I think it's this one. When you are having the transactions here, which you have been given, first question which you ask yourself is this transaction increasing or decreasing? I mean, which are the two accounts that are involved? It will be an asset here. I think it's an interest expense. It will be an asset. I mean, sorry, it's a liability and an expenditure. Which of the two accounts that are involved? Liability and expenditure. Liability and expenditure. Then you ask yourself, liability increases on the credit side and decreases on the debit side. is this increasing or decreasing? If it's increasing, meaning it must go to the credit side of that particular account,
Oh,
which
okay.
you are doing, and you go and record it on the right side. And sometimes we give you the, how do you call, the cash journal books, like your cash receipt journal, your cash payment journal, etc., etc. This is where you take the totals, and again the totals of all these useful line items. I will just put this 9,600. I don't remember what was it for, but anyway. Anyway, the total of the bank account there, the total of the bank account, of course, with you and your calculator, you will be saying 6,600 plus 66,000 plus 9,600 plus 85. But majority of the time, we will have given you this if we are testing the general ledger account. So you will come and take the total of the bank account as an example, and you will need to transfer it there. This is the cash receipts journal. Cash receipts journal records all the money that we have received. So meaning the bank total which is there, it's increasing the bank account. And remember, the bank account is an asset, and assets we have already said increase on the debit side. So cash receipts journal on the debit side of the bank account. Cash receipts journal will take the total of the bank account and we will plug it there, which is 75,685. On the debit side, we will plug it there. Then we'll go to the cash payment journal. Cash payment journal, it does have something on the total of the bank account. It's 70,000. I don't know. Sorry, it's 58,500. 58,500. It means on the credit side of the bank account, we will go and put in that 58,500. Remember the reasoning and or the thinking behind the cash payment journal balance coming to the credit side is that cash payment journal records all the monies that we have paid as an organization, and the monies that we have paid, of course, depending on what are we paying for. However, when the ones that goes to the bank account, they are reducing our bank balance. And the bank, it's an asset account, and it decreases on the credit side. That's why the ones that are coming from the cash payment journal will credit them. And the very same goes to all the other accounts, salaries, equipment, if they're having totals. That is the logic or the thinking when you are plugging them. Sales is the same, depending on whether it's coming from the cash receipts journal or the cash payment journal. Just don't forget the things like equipment as an example. If it was having an amount here, it will mean if it's on the cash payment journal, it means we're paid for an equipment. And when we've paid for an equipment, it means money has decreased, but our assets or equipment have increased. And the equipment is an asset, increases on the debit side. So meaning this total is going to go to the debit side of the equipment account. Salaries, it's an expenditure account. When we're paid salaries are expenditure account. When we've paid salaries, it means salaries are increasing. Salaries are an expense, they increase on the debit side of the expenditure account. And then it means on the T account, if we're having an account called salaries, on the debit side, we're going to have that money coming from the cash payment journal accordingly. Cash receipts journal, similar. Sales, we all know when we are selling things, we debit bank and credit sales, or sales. It is an income account, and an income account increase on the credit side, meaning the total of the sales will go on the credit side. VAT output, we all know that this is a liability account. Liabilities increase on the credit side, meaning on the credit side, that's where this balance. Cost of sales, we all know it's almost like an expenditure account in inverted commas, which means it increases on the debit side, meaning on the debit side we're going to have the cost of sales side of thing. Rental income, it's an income account, it increases on the debit side, meaning on the debit side we're going to have this. And I think I should highlight this column of sundry on the cash receipts and cash payment journal and petty cash, that this is the only column where you are not going to use the total. You are going to deal with these transactions individually, mainly because they will be for different things. You can see that the other one is for interest and the other one is for rental income. So they are for different things. We'll deal with them differently. So meaning if it's a rental income, we're going to take 9,600 and put it on rental income on the credit side, and on the debit side it will be going to the bank account. However, remember, we'll have already used the total for the bank, so this will go along to the account called rental income on the credit side. And interest, if it's an interest expense, it will be this is an interest income, it will be credited on the general ledger account accordingly. That is the how it works when you are moving it from here to there to the T accounts, so that you can be able to close them. I don't remember if it was Daphne talking. So your biggest problem, Daphne, is it understanding which accounts are asset accounts and which ones are expenditure accounts, or understanding assets increase on the debit side and expenditure increase on the debit side, or is it understanding the totals on the cash receipts and on cash payment, where do they go?
So I think it was Cele.
Oh, it was not you. Sorry, Daphne. Cele?
Oh no. No, sir, not where what accounts are affected. Sorry, what accounts are affected. I was just saying, Guti, the problem that I faced now that you are explaining it here was that you find that that's the issue. We forget the closing of the balance is not the issue. While we are doing the transaction, I forget where what must go where. So if it's debit balance, maybe I make a mistake and I credit it, or even if it is debit, I make a mistake and I increase the wrong amount. I think that's the problem that I faced.
Yeah, that's the big problem.
Yeah.
Okay, but I think just be comfortable with which accounts are asset accounts, which accounts are liability accounts, and that will then give you a direction as to which one needs to be debited and which one need to be credited. If you are able to master that, it will then give you direction on which one to post where. And when you are dealing with these areas where you are not fully comfortable with, Try to work a little bit slower so that you can avoid making mistakes. Otherwise, you'll have to do a lot of thinking hard later on, whether it's a debit or a credit. But if you happen to forget, even after writing, whether it's a debit or credit, just come back to the basics. Is this an asset or a liability, or an expenditure or an income or an equity account? Is it increasing or is it decreasing? If it's an asset and it's increasing, do assets increase on the debit or the credit side? They increase on the debit side. Then you go to your answer, you go and correct whatever that you have done wrong so that you can be fine. So I guess we are fine with that, but just quickly to run through the balancing. The balancing, you just compare the debit side and the credit side, and you take the bigger side and put them as your total. And after putting your total, then your account must balance, meaning the side which is smaller now, you take the difference between the total which you have in the total column and the total of that particular section. And if it's an asset, liability, or an equity account, this will be called balance carried down, and we will plug it again on the opposite side to say it will be the balance brought down in the next reporting period. And this is the amount that we will take to the trial balance. And you can see it's sitting on the debit side. It's going to go on the debit side of the trial balance. This amount, don't forget that. It's sitting on the debit side. It's going to go on the debit side of the trial balance. Don't forget that. And the very same principle will apply on the capital. Services rendered, same principle. The only difference is that the difference is going to an account called profit or loss. An account called profit or loss, which is an equity account. That is the only difference. So someone spoke about the trade receivables. Trade receivables. We'll just copy our bank and call it trade receivables. Trade receivables. Trade receivables, remember, these are the debtors in old language. These are the people who are owing us. And these debtors, majority of the time, they come from a book called, unfortunately, I don't think we have it here, a book called a sales journal, sales journals and sales returns journal. They will bring things here. They will bring balances here. The sales journal and the sales returns journal. They will bring balances here. And sales journal, meaning those transactions that we have made, the credit sales during the month or during the reporting period. They will all come on the debit side. The reasoning being, when we have sold things on credit, those people who are owing us, they are now our assets, and assets increase on the debit side. Let's call it 10,000. Assets increase on the debit side, and if there were some returns, they will be on the credit side of this one, unless if they were already closed on the sales journal on the sales ledger in the general ledger. But if there were some returns or goods that were returned during the reporting period, they will all come here on the credit side. And the reason why they're coming on the credit side is because when a person is returning items that they have bought from us on credit before. They were owing us 10,000 and now they're returning 3,000, meaning our receivables or our debts are decreasing, and the debts decrease on the credit side since they are assets. And how you close it, you do the same. You look at the debit side and the credit side, which side is bigger, and use the bigger side as the total. Then the difference, because trade receivables is an asset account, the difference is called balance carried down, and you also do balance brought down in the next reporting period accordingly. That's how simple it becomes. And when we say you take the 7,000 to the debit side of the trial balance, we mean exactly where is our trial balance here. I don't see it. I don't think we have it. But I believe we all let's assume this was the trial balance. It means on the debit side here, we're going to have that figure, and it will be called trade receivables, and with the same amount of 7,000 rands. This one, 7,000 rands debit side. It means it goes, and yeah, that's more or less how it is. Is there anyone who's still having a challenge and or a lingering doubt in your minds about this general ledger accounts or the T account? It seems like we are all happy. Okay, let's move to the next section, which is doing things in the statement of financial position. Oh, sorry. Cele?
Yes, sir. Before we go to the statement of financial position, here's another question with regards to the closing transfers in the general journal. There was question 7 in the assessment, sir. It was worth 20 marks. I got a nice, no laughing, 4 out of 20. But I think my issue was, so here's the, can I read the question, sir?
Yes, please.
Okay, it says Mechet Traders specializes in selling quality household appliances and various household goods. The business is a registered VAT vendor and applies the principle of the periodic inventory system. The VAT rate is 15%. The following is an extract from the trial balance of Machete Traders as at 31st March 2023. We had sales, we had purchases, we had sales return, purchases returns, settlement discount granted, and settlement discount received. We had to record the closing transfers in the general journal for sales, sales returns, settlement discount granted, settlement discount received, purchases returns, and purchases. And then in that general journal, we were given those closing transfers.
Okay.
First question.
And what are you calculating?
We are doing the closing transfers for sales returns. That is the required. Yes. And then they gave us like that yeah, where you're supposed to write your answers. And it was worth 20 marks.
Almost filling in what is missing.
Yes, filling in.
But the fields that were missing in the main, what were they? Because that almost become mathematics most of the time. But what fields were missing?
What fields were missing in those closing transfers?
What are the main ones?
The sales return, the settlement discount granted, sales, settlement discount received, purchases returns, and closing transfer for purchases.
Oh, okay. But there were no additional information in terms of, for example, if we're dealing with the sales returns as an example, there were no additional information with regards to what was returned for how much.
or the sales returns was 5,287. My question was that because I got a bit confused here, it's the periodic inventory system one, two, the VAT rate is 15%. There is no information about calculating VAT, but Mina, I thought that maybe in the periodic inventory system we also have to apply VAT to the amount that is already given. Kanti, by doing that, I'm going to get the answers wrong.
Oh, I get you.
Yeah.
I get you. I think the trick is, of course, sometimes we can tell you that ignore VAT, meaning even if you know the percentage, you may have to ignore it. But sometimes it will be given, and we could tell you that the figures do not include, or the figures, the figures do not include VAT. So meaning, if we're saying the figures do not include VAT, it means you might not have to calculate anything, unless if we said all these figures include VAT. And sometimes this is where it becomes difficult. We assume that if we are putting figures on the, for example, this account on the screen, the services rendered, if we are putting figures here on the GIL account of an income and expenditure account, we assume, remember, these figures exclude VAT, and we assume that you know that income and expenditure figures that are on the general ledger already exclude VAT, and that way it becomes difficult. We assume that you already know that, and if you don't know that, that may be a challenge at times. And sometimes the assumption would be that, remember, the figures that are on the what do we call it? On the trade receivables, as an example, we write the total figures including VAT. So we'll assume that you know that figures that are in here, they already include VAT, and meaning whatever you do, the assumption is that you know that, and if you don't understand that, that may be a challenge. Just a matter of minor switch in your mind that you will need to make when you are writing. If you are not told what is the VAT situation, you just need to remember that income and expenses that are already recorded on the TBGL profit and loss statement or wherever, those figures do not have VAT inside, and the figures that are on the balance sheet accounts, income expenditure, if they do attract VAT, like receivables and payables, they do have VAT inside in that regard. Molema, you were saying something when Ella was still talking?
I was asking which question she was talking about, but I found it.
You found it, okay, and you are happy.
Yes.
Okay, let's jump to the statement of financial position and performance, but performance is more mathematics. I think we have done it when we're doing unit 10 and unit number 11. There we go. This is a statement of financial position. I understand you were asked to calculate current assets. Of which I believe what was given was the trial balance. So now you had to calculate the current assets, the pre-adjustment trial balance. Where is my trial balance here?
So,
yes, sir.
I think the question that I was talking about when I was explaining, I found it. I found the question that what they asked on the question.
Yes, what are you asked?
They said, what will be the outstanding payments amounts be in the bank reconciliation statement?
Oh, it's bank recall.
Yeah, this is the question I mostly struggled with the calculation because they only gave us
Outstanding payment.
payments amount. Yeah.
Sorry, my microphone disconnect. Oh yeah, it's still working. Sorry. Outstanding payments amounts on the bank reconciliation statement. We'll look at it as well quickly. Okay. Oh, sorry. We were talking about the scenario where you are given the pre-adjustment trial balance and you're asked to calculate the current assets. Remember, colleagues, the pre-adjustment trial balance will look more or less something like this on the screen, which is having all the accounts, the nominal accounts, the balance sheet accounts or the financial position accounts, and the income, expenditure, liability accounts, etc., etc. What is key for me, it's going back to the basics first to ask yourself which section has current assets here on the pre-trial balance. The assets sections are this part, and which of these assets are current and which ones are non-current. Remember, the current assets is those that are convertible into cash within a 12 months period, very broadly speaking, and non-current are those long-term assets that we utilize in conducting business, of which by just looking, capital is not an asset, drawing is not an asset, land and building is an asset, but it's a long-term asset. Long-term loan is not an asset. Software is not it's not a short-term, it's not a current asset. And computer equipment is long-term. Trade receivable is a current asset. Trade payables is a liability. Bank, it could be an asset, but here the trick is that it's having a credit balance, which does not make it an asset, it's a liability. And the petty cash, it's having a debit balance, which makes it an. So meaning we have two current assets, which is the trade payables and the petty cash, which on our statement of financial position under current assets, we just need to transfer them here under current assets accordingly. If we are asked to calculate the total, it means we just do the total of the two. However, there is the there is the additional information that you would have been given to say this and that has happened, which you need to consider. When you're considering additional information, ask yourself a question: which of these current assets or whatever account is being affected by this additional information? And please adjust directly on your answer so that you save time. Directly on your answer so that you can save time. For example, they say depreciation, it has no impact on current assets, it has impact on non-current assets. But however, if this section was asked, that's when you will be asking yourself which accounts will be affected by the depreciation, which will be your depreciation account and the accumulated depreciation account. And then you go and adjust the meaning depreciation will increase by whatever depreciation amount which you would have calculated, and the accumulated depreciation will also increase but whatever amount that would have calculated. A company called Mary and Roberto, which owed us 20,000, has been liquidated, and an outstanding debt is irrecoverable. Remember, this is the credit loss and the trade receivables, and our trade receivables are going to decrease by 20,000. It means where we're doing our statement of trade receivables, if we took 50,000 from the TB, you come and minus the 20,000 here, and you have your 30,000. That's exactly what you do directly here. The main issue is when you read the additional information, you ask yourself, which of the accounts that I've been asked will be affected, of which year is trade receivables, which is one of the current assets that we've been asked. You go and minus it there, and you put it there, the new answer or the right answer, you put it there in the amount. So it's important to understand the structure of this thing as well, because sometimes even though it happens rarely, so we usually ask that in bank record, which we're going to deal with now. Sometimes we can be given sorry, the total assets, total current assets, total non-current liabilities, blah blah blah, and maybe you're given everything else, and they remove the total assets, and they ask you how much is the total assets. If you understand the structure and the principles, you remember assets equals to equity plus liabilities. So meaning total assets will be exactly the same as the total of this everything else here. And even if they just miss something else at the middle, let's say you were given assets and they just miss the equity, and you have the liabilities and the assets. Remember, assets equals to equity plus liabilities. So meaning assets minus liabilities will give you the equity. Just remember that, so that sometimes we do ask that kind of mathematical calculations, so that you can test if you understand that. So for me, the key is understanding what is assets, what is liabilities, what is income, what is expenses. Then when you understand that, differentiating between the non-current asset and the current assets, current liabilities, and the non-current liabilities. The remember key, those that are used or transferable into cash within 12 months, they're called current assets. And those that are used for long-term, for longer period than 12 months, they're called non-current assets. The very same principle goes to liabilities. Those that are payable within the short space of time of 12 months, they are current liabilities. And those that are payable long-term, they are long-term liabilities. But liabilities, they're almost straightforward. You will be able to see them. Things like your bond on a building, which gets repayable within a long space of time of 20 years. That is a long-term liability. Things like your vehicle financing, which also gets paid within 5 years period, that becomes long-term. Ms. Lachom, you wanted to say something?
Mm-mm.
Okay. So that's more or less how it looks. The very same principle goes to the statement of profit and loss, where you would make the transfer. I think this is where we have made a very nice example Saturday before the last, where there were issues of depreciation, where you already had some depreciation given, and you had to add 12,000 and 21,000. You see how I have done it here. So meaning on the trial balance, you were already having depreciation, and you were told that there is this other depreciation which has not yet been calculated. You went and calculated here using these percentages. Then you can get 12,000 and 21,000. You come and add them here, and then your total becomes whatever that would have been asked. And again, you can be asked a mathematics question here, where they give you the profit and they give you expenses, and they say calculate revenue. Just remember, profit or loss equals to revenue minus expenses. So you can work it backwards mathematics wise. You should not be confused. Sometimes they can even give you profit and the sales or revenue and say calculate the total expenses. Do the same. You take your revenue minus your profit, it becomes your expenses. Everything else balances out. That's what happens. Let's jump over, if we're happy, let's jump over to the bank reconciliation statement. We've done it. I think even last week we have repeated it. Yes. Bank reconciliation statement is not the most difficult, it's just the most trickier one. Mainly because I will just quickly run through it, and then Mulema, you will highlight which areas you want us to deliberate on. The bank reconciliation statement is not the most difficult one, it's just the most trickier one. Mainly because it works almost on a reverse accounting kind of, more especially on the bank recon itself. Because remember, bank recon is almost like we're rewriting the bank statement. And remember what I've said, that on the bank side, when you take your money to the bank, of course, for accounting inside, when we're recording, we're debiting bank or throwing it on the cash receipts journal. But on the bank side, when you have given them your money, on their side, they say they owe you the amount that you have given them. If you have deposited 20,000, it means the bank account it as if they owe you 20,000. So on their side, it's a credit balance, not a debit side balance on their side. That's why on the bank statement, you will see the bank balances per the bank statement. If it's a favorable balance, it is going to be a credit balance. So bank recon really has 3 parts or to it, of which they are very simple and straightforward. The first part is the is the balance which is coming from the bank statement. There it is. If it's a favorable balance, remember, the bank see it as if they are owing you and it's sitting on the credit side. You plug it there. The second part is the bank which is coming from our general ledger. Remember, our accounting works slightly different. When we deposit money to the bank, is increasing our bank account, which increases on the debit side. So bank balances per the general ledger sits on the debit side. Then there are reconciling items that come in and between. These reconciling items, there are items that will be coming from here, from the question itself. They are going to tell us, and these reconciling items, hear me carefully, the ones that goes to the bank recon, these are the items that need to be adjusted and or corrected in the bank reconciliation statement, or things that needs to be adjusted and or corrected by the bank, if I can put it that way, by the bank. Those are the items that are going to the bank reconciliation statement. And whether they go to the debit side or the credit side, you ask yourself a question. Remember, your favorable bank balance is already sitting on the credit side. Are these items going to increase your balance in the bank or decreasing it? Those that are increasing the balance in the bank, they are going on the credit side, almost the opposite of what we usually do in the general ledger. They're going to the credit side. Those are going to increase the balance in the bank, going to the credit side. And those are going to reduce the balance, they go to the debit side of the bank reconciliation statement. So now let's look at the things that are listed. And remember, things that are listed here, it's either they get recorded on 3 or let's call it 4 areas for now. 3 areas for now. It's either they go to the bank reconciliation statement if it's the bank that needs to make an adjustment, or they go to the cash receipts journal if it's us as the business who need to make an adjustment and it will result in money coming into the bank account, or cash payment journal if it's us who need to make an adjustment or a correction and it's something that will result in payment of the money. So now I will start with C. The following information in March bank statement received from the bank did not appear in the cash journals. You can already see that Malima, when they say these transactions, they appear on the bank statement and they are not there on the cash journals. Who needs to make the adjustment? Is it the business or the bank?
The business.
100%. And if it's the business, where we're recording, it's the cash receipts journal or cash payment journal, depending on whether we're receiving the money or paying the money. A deposit from Dawi for 9,600 rent, meaning this is money in. This is one of our debtors, sorry, this is one of our tenants who has paid us 9,600, but we have not yet recorded it. They've paid directly to the bank, we have not yet recorded it, meaning cash receipts journal. I'm not going to repeat cash receipts journal. We all know, we just fill in this document. And debit orders. Remember debit orders? It's when the bank has paid something on our behalf, and we have not yet recorded those transactions. So meaning bank has paid town council 4,890 on our behalf, and Mulima has already indicated that it's us who have made who need to make adjustment, and we're paying the money, meaning this is the cash payment journal. The very same principle go with all three of them. EFT fees, these are the bank charges that we have paid to the bank. However, we have not yet recorded them. It means they go to the cash. So the principle goes in all the transactions that are recorded there. Then D, it says the following information in March 2020 cash journals did not appear in the bank statement for March 2020. Remember, they're saying these are there in our books, but they are not in the bank statement. So meaning who needs to make the adjustment is the bank that needs to make the adjustment. And the first one, they say outstanding deposit of 21,700, meaning someone has paid us 21,700, but it's not reflecting on the bank. So meaning the bank has to make an adjustment. If someone is paying us 21,700, does it increase or decrease our bank account? It increases our bank account. As I've said, it will go on the credit side, because when the money goes into the bank view it as if they are owing us, hence it's sitting on the credit side. It goes on the credit. This one you can even just memorize them. Those that are increasing the bank account, credit side. Those that are decreasing the bank account, debit side. On top, balances by the bank statement. At the bottom, balances by the general ledger. Then you are done with the bank reconciliation statement. EFT of 7,000 for trading stock purchased, meaning we have paid 7,000 EFT, but it's not reflecting on the bank statement. When we have paid the money, let's start with when we have a transaction which we have recorded on our books, but the bank has not yet reflected on the bank statement. Who needs to make the adjustment is the bank, meaning it will go to the bank reconciliation statement. And this is the payment. When we have paid the money, it's reducing our bank balance, meaning it will be recorded on the debit side of the bank reconciliation. More or less, that's how it works as the basics of the bank reconciliation statement. So let's jump now to the Molema's question, to say sometimes you are given all these things and you are asked to calculate a specific figure here. That becomes mathematics now. It's not really accounting, but the principle is, remember, when they say the bank reconciliation statement is balancing, the debit side and the credit side must be equal. Ours is not the same because we jumped other transactions, but let's assume they're the same. Let's assume they're the same. So let's assume they're the same. The assumption is that the debit side and the credit side of the bank recon are equal or are the same. So then you can then be asked one of the random questions coming from inside to say, how much are the missing payments, as an example. Remember, the payments that are on the general ledger and or on our cash books, and they're not reflected on the bank statement, they have to be recorded on the debit side of the bank reconciliation statement. So meaning what is missing is on the debit side. You are able to then come and say, oh, the total on the credit side is 21,700, and because the missing part is on the debit side, meaning the credit balance is correct, then you will take it and make it the debit balance as well. Then you can calculate the total of the debit side minus the total that you have. The missing part is the missing part. That's how simple it is. And sometimes it could be on the credit side, which is wrong. It depends on which side is correct and which side is wrong. You take the side which is correct and you use it as your base and you work backwards. Sometimes you may need to add 1 or 2 transactions that they require in and between. Don't forget to add those other transactions that you are required to add in and between. Then you can recalculate. Sometimes they can ask you a question which is completely not a bank reconciliation statement question. Just like here, I think there was a question which said calculate something. Oh no, I think yes, here it is. What is the balance according to the bank statement as at 31 March? So they're asking you what is the balance as per the bank statement according as at 31 March. But this becomes the very same principle. So meaning that 20,000 will not be there, but the debit side will be there. So meaning your role is to come and calculate the total of the debit side and get it. Because the debit side is complete, you will put the total as the credit side as well. Then if there are other figures inside, the total minus other figures that are inside, then you get the missing 20,000. That's more or less how it works. But I wanted to say sometimes they will ask you on a bank reconciliation statement format, but something that is not necessarily a bank recon question. Sorry, they can ask you from on the general ledger point of view and say how much was the opening balance for the bank account, as an example. How much was the bank account opening balance? What you need to know is to remember the principles of balancing the general ledger T account. So meaning all the transactions that are going to affect the bank account here, which of course will be all these that are going to the cash receipts and the cash payment journal. You are going to record them on the debit and credit side of the bank account, meaning those that are going to the cash receipts journal, you will quickly add them up on the debit side of your bank account, and those that are going to the cash payment journal, you record them on the credit side of the bank account. Since you will be having a closing balance, you will come and plug in the closing balance. Then you work backwards in order to get the opening balance, meaning you will take whatever. Remember, closing balance is the difference between the bigger one. You then take this and that, minus them, and determine how much was the opening balance there, depending on it being the difference in that regard. So it can come to confuse you as a bank recon question, while it's not necessarily a bank recon question, but it's more of a bank account balancing or the T account balancing question in that regard. You see that Molema, more mathematics. Which area are you still not certain with?
Yes, I understand, sir. Thank you.
Thank you for that, Mr. Molema. So bank recon, remember, is not the most difficult, it's just the most tricky one. And we barely ask any hardcore questions on this one because we know many people, it confuses them because of just this inverse of how the bank views the debits and the credits. But if you master that, you you are going to ace it. You will not have a problem. So that was that. The bank recon. I think we have touched on all the areas that we highlighted as the tricky parts of the assessment number 4. Let me close by looking at the few exam technique. As we are going to write the exam not so long, this is important. This applies to the exam and assessment number 5, etc. When you are writing in general, when you are writing the financial accounting, the right state of mind is very, 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 very important. You must be in the right state of mind. I'm not a psychologist. I will not talk psychology. However, I know we've all passed matric, or we've all went through matric. We understand what are the right things and what are the wrong things at this level. So don't do the wrong things that will make you to be in the wrong state of mind when writing. And since we are writing online, the environment where we are writing, let's also make it a very conducive environment where we'll be able to write without distractions. If you know that your home or where you live has a lot of distractions, like myself, when I was still a student, I used to live in a home where there is a tavern, where studying and books was just not possible. So if you know that your home has a lot of distractions, just go to the local library or go to the nearest UNISA Learning Center and sit there and take your assessments and or your exams without distractions in that regard. That's distractions. And time management. Unfortunately, I think I've already indicated before that we are not only testing you accounting, we're also testing you on time management as to how good or bad are you in managing time. And you need to excel, and you will see this when those who will study accounting further, when you go to the CTA level, the paper will always be long in such a way that we know that no one is going to finish. So now it becomes, how good are you in spotting where to score and how to score the marks. So time management becomes important. And I always advise that view an assessment or an exam as a game that you are playing. And this game is called marks scoring game. So meaning you are there to score marks, nothing more, nothing less. You are there to score marks, nothing more, nothing less. And I know sometimes, more especially if you are overconfident and overprepared, this is where you are more likely to get it wrong. People who are overconfident and overprepared because they think they know everything. And sometimes even if they're asked calculate cost of sales, they will still want to calculate sales, even though it's not asked. What is asked is cost of sales, because they have studied sales and they know it very well. But you won't even have a space to write those other additional things that you know very well and you are trying to calculate. So don't waste time in writing things that, or calculating things that are not required. Approach this as a marks scoring games and capitalize on getting as most marks as possible. And number 3 is the computer. This is computer now, and I think I must open a document to show you computer keyboard characters. I have noticed on one of the my UNISA groups, there are 2 or 3 people who have highlighted that there is something called in computer language and mathematics, something called a thousands separator. In accounting, we'll never talk about it at all. What does that mean? It means your numbers, you must just type numbers, no spaces or any other funny things, dashes or whatever in and between. Your numbers must be numbers. So meaning if your answer is 20,000, please type 2 and 4 zeros. That's 20,000. Sometimes, not all that, sometimes it might not look nice. You know, you could find that you want it to have spaces and whatsoever and whatsoever. That is wrong. When you write numbers in our assessment, we don't want any form of decorations. We just want the number that is required. If it's 20,000, write 20,000. I want to make it big so that you can see it properly. The red one is the wrong one. The green one, I hope it's not blue. The green one, if it's blue, forgive me, it's green for today. The green one is the correct one. If we say 20,000, 20,000 means 2 and 4 zeros. Not 2 space dash what, no. That is wrong. 20,000 means 2 and 4 zeros. And I think it's important to also highlight that this one I must make it too big now. Most of all the time we'll tell you what character are we using for decimal places. Decimal places or decimal separators is those comma what. And I know I'm using the wrong words already now. Those numbers, those digits after the full number. If your answer is 19 rands 50, 19 rands 50, and we say the digit separator is a dot, please write a dot, not a dash or a comma. There is difference between what I'm going to write now. That is a dot, that is a comma, that is a dash. For a human eye, these 3 items are the same. But for a computer, these 3 items are not the same. And if you are writing 19 rands 50 and you wrote 19,50 and you wrote it the wrong way, unfortunately, even if the answer is 19 rands 50, you just made a mistake of a comma and you put a dash or a space or whatever, unfortunately, the computer is not a human. It's going to mark it wrong. And I know there are computers that are having keyboards that are I wouldn't say faulty, let me say that are different, where when you put a comma, it puts a dash or it puts something else. Colleagues, please, just make sure that you know where is the dash, where is the comma, and where is the space on your keyboard, so that when you are writing, you will know which button to press. It's not always a dot, is not always a dot on the keyboard. Those who are having such challenges, they will know what I'm talking about. A dash is not always a dash, and a comma or a dot is not always a dot. So majority of the time, we're going to tell you that our decimal separator is this one, which is a dot. That's majority of the time we use the dot, which is this one. The comma, no. And the dash, never. Please, make sure that when you are reading the question, we're going to tell you what is the decimal separator. We're going to tell you, majority of the time we'll tell you it's a dot, When you say it's a dot, please, the dot is something like this. Unfortunately, in the olden days, when we were still writing with a pen and paper, it didn't really matter much because it's a human who was reading our handwriting. And unfortunately, sorry, this time around, it's a computer which is reading, of which those are three different things in the eyes of the computer. So let's make that. And I know when you are writing the exam, some of you might be allowed to write on the paper. If you have never written anything in a paper in the last 6 months, can I say, please, don't take the option of writing on a paper, because it's not going to go well. Because if you last wrote something on a paper, or the last thing you wrote was when you are signing some documents 2 weeks ago, that might not necessarily give you the same speed required as and when you are writing the exam. And those who might be having some limitations where they really need a paper and they've been granted permission to write on the paper, please don't use a ruler. There is something called ruler. If they say do a TB, please don't use a ruler, just use your hands. There are no marks on beautiful decorated TB or whatever, so don't use a ruler. But I doubt if there's anyone here who has been granted that particular permission. So yeah, let's not, if that option is made available, must just know ourselves we're the new generation, which is a typing generation. We barely write anything with a pen and a paper. Probably some of us don't even own a pen. So let's type on the computer accordingly. Let's move on. That was the computer keyboards and characters. And the use of calculator. This is a painful one, because as accountants, we are expected to be the masters of calculator. However, majority of the time when surveys are being done on those who get the distinctions or who get 100% on accounting papers, 90% of the time they don't use the calculator. The reason why they don't use the calculator, they say it wastes time, and most of the numbers are almost obvious numbers that they can easily calculate in their heads without having to use the calculator. So the very same applies here. We barely really, remember, we're not testing you on mathematics, we're testing you on accounting. We barely really use complex numbers that really require calculator. Majority of the numbers that we use on the assessments are numbers that you can easily just do a sum in your head without having to press the calculator and put them down. So where we can add and subtract without a calculator, let's do that. Only exceptionally use the calculator if maybe you are summing up something long which you cannot do in your mind in that regard. And remember, there are very minimal marks for totals. So meaning if you find yourself stuck 20 minutes calculating total of something, you must know you are lost. Just try to more or less make it up in your head, have the total and move on. 20 minutes for calculating a total of something, it's a no and a waste of time, because at the end, the total, at most, if it has a lot of marks, it can be like half a mark for a total. So you can imagine you are using 20 minutes to calculate half a mark. That is a very long time wasted. So that is all about the calculator, and let's focus on scoring easy marks. This one, I think I've already indicated earlier on that see these exams as a game of the marks scoring game, and you want to get as much marks as possible. Let me open what we have done just recently on unit number 9 and 10 to use it as an example. if you are given a preliminary or pre-adjustment trial balance like this, and they say prepare the statement of financial position as we have initially indicated. Here's the statement of course, remember we're going to give this to you on the page, and just leave out the figures that you need to calculate. Look here. There are 3 items that will require to be adjusted, which is the depreciation. Of course, we know that this touches on the property, plant and equipment. There is the trade receivables. There is the I think this is income received in advance. There is the income received in advance. There are 3 accounts that will be will need to be adjusted on the statement of financial position. Now, when you are writing the exam, can you see how many other accounts do you have? They're like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There are 10 accounts, but only 3 will require adjustment. So meaning you already have almost 7 free marks which you can get without calculating anything or not even thinking about anything. Capital is 300,000. You take the given information that you just need to plug and deal with that first before you even crack your head about many other things. Meaning on the capital, you're going to have your 300,000. I don't know where is this coming from, but anyway, your 300,000, and you will plug it there. Your drawings under tower, sorry, I think these 2 were netting off each other. You know that on the statements of changes in equity, this one and that one, they net each other, and then they give you a total there. Land and building, land and building, it's not affected because the depreciation is for software and computers. Meaning land and building 450,000. You can go and plug it on the statement of financial position under property, plant and equipment. Where is non-current? Land and building. You go and plug it there. $450,000. Go and plug it there. And a long-term loan, 350,000, is also not being adjusted. You go and plug it there. Long-term loan, 350,000. Software cost 50,000. This one is affected. It's either you can jump it for now and deal with all these other ones. When you are done with dealing with the obvious ones or the easy ones, that's when you will come and deal with the ones that are affected by the adjustments. Depreciation, they said depreciation, what you will then minus this depreciation amount from the balances that you are having, and you will plug them there under the computer equipment. You will minus them there and have the total. The computer equipment will do the same. Calculate depreciation according to how you will need to calculate it and plug it here accordingly. But the key is, what I wanted to show you is that score easy marks first. Those items that you are given that are not subject to adjustments, that you just need to take from the question to the answer, please run with those first and finish them first. Then you can deal with the difficult ones last, or the ones that require adjustments last accordingly. And second last, please read what is required first. I know this is bad teaching for when you progress, because at CTA level they are not going to give you what is required. They will give you the background information first. In fact, I think sometimes they even give it to you, like when you are doing APC, they give it to you like a week in advance to say here's the background information, and they don't give you what is required. So, but here at our level, since they give us what is required first, please read what is required first. Like for example, on our question here that we're looking at, there is a section called required. There is a section called required. You read what is required first. The first one says prepare the statement of profit and loss, meaning you are going to prepare a format of the statement of profit and loss. If you are writing, prepare the statement of changes in equity. You know how the statement of changes in equity looks. You are going to prepare that. Prepare the statement of financial position. Sorry, you are going to prepare the format of the statement of financial position. So read what is required first, so that when you come in to read the background information, in your mind you're already making up what is it that you are going to do with this information, because you will be given information that is completely gibberish, that you are going to do nothing with it, absolutely nothing with it. And unfortunately, if you start with reading the background information, you can begin calculating things that do not exist or that are not going to help you with anything in that regard. So it's always advisable, start with reading what is required, so that you will know what exactly you are going to be doing in that regard. In our scenario, most of the time, the format will already been given to us. However, it's important that we also start with what is required, so that we can see what is it that we're going to do on those provided fields or on those given information in that regard. And the last one on this slide, please use the answer sheet as a guide on what to think or what to calculate. Meaning, after reading what is required, look at what sections are you supposed to be filling in, so that even when you are doing your pre-calculations, you know exactly what you're calculating, so that you don't waste time calculating things that you are not required to do. And lastly, from me, is the assessment, which is coming. It's coming on Monday. For those who didn't get distinction on assessment number 4, this assessment is coming on Monday, the 29th of September. It will open at 12 in the midday, and it will close at 4. But it does not necessarily mean that you will write for 4 hours. It will give you, I think, 2 hours limit or so. And it covers from unit number 1 up until unit number 11, and it counts 40% towards your final mark. And remember, assessment number 4 and 5 it's where we will take the higher of the two. So meaning, if you did well on assessment number 4, when we calculate your 40%, we will use assessment number 4. And if you do well on assessment number 5, of which I expect all of us to go and get distinction on assessment number 5, we'll then use assessment number 5 to calculate the final mark. So this is where we end. Is there anyone who wants to say anything before we finally close our class? This is the last class for this semester. No closing remarks. All I can say is 12th November is it's right around the corner, and I think we're giving you fairly enough time to go and do assessment number 5 and have enough time to prepare for the final assessment. If there is any question that you require clarity on, you know our channels. You can send an email to our FAC email address, where there is a group of academics, including myself, who will look at your question and give you almost prompt and appropriate response. And on my UNISA, at the end of each and every unit, we also have a discussion forum where feel free to post any of the questions that you have there. You will get almost immediate response, or within 12 to 24 hours you will be having your response in that regard. And if you feel that you are stuck, you are allowed to send an email to our FAC email address and request an appointment with one of our lecturers. I think our module has 3 lectures or so, of which will be allocated someone to have a face-to-face discussion with you and discuss those areas that you are having challenges with. From my side, all I can say, all the best, and I don't expect to see any of us coming back next year when we do this module again. I hope I'll get a promotion and teach second level as well. I might see you, some of you, in the second level modules accordingly. Colleagues, we will end here. Thank you so much, and all the best.
Thank you, sir. Thank you.
Thank you,
Thank you so much,
sir.
sir.